right, so we're diving deep today into something that's been making a lot of headlines, the Japanese yen and the U.S. dollar.
Yeah, they've been sort of locked in this dance for a while, and things are getting pretty tense.
It's one of those things where it seems super technical, like currencies going up and down, but the sources you've been digging into paint a picture of this having some really big potential consequences.
Oh, absolutely, yeah.
So let's start with the basics for everyone. What's the story here? What's got everyone so on edge?
Well, for like the past 15 years, the yen has been kind of weak compared to the dollar, and this actually made a certain type of trade, the yen carry trade, really popular.
Okay, now when you say carry trade, that might sound like jargon to some people. So break that down for us. What exactly does that mean?
Basically, you borrow money where interest rates are super low, right? In this case, that's Japan and the yen. Then you take that borrowed money and you invest it in something that pays a higher interest rate, which was often in US dollars.
So for years, it was kind of a no-brainer. Borrow cheap yen, invest in dollar stuff, profit, right?
Pretty much, yeah. But here's the thing. That whole dynamic is starting to shift.
Okay, so what's changing? What's throwing a wrench in this whole carry trade setup?
Well, a couple of things. First, Japan is seeing inflation, prices going up. So they've started raising interest rates to try and cool things down.
Makes sense.
Yeah.
But how does that impact the U.S. side of the equation?
Well, meanwhile, the U.S. economy might be slowing down. And if that happens, the U.S. might actually cut interest rates to encourage borrowing and spending.
So one country's rates are going up, the others might be going down. That's a pretty big deal, isn't it?
It is, yeah. It basically makes the whole yen carry trade a lot less appealing.
Right, because suddenly borrowing yen isn't as cheap as it used to be.
Mm-hmm.
And the return on those dollar investments might not look so great if U.S. rates are falling.
Exactly. And now imagine all those investors who jumped into this trade over the years, they might decide to unwind those positions all at once, sell their dollar assets and buy back yen.
And that's where things could get a little messy, right?
Yeah.
Everyone rushing for the exit at the same time.
Exactly. It could cause huge disruptions, market shocks, and even what they call liquidity freezes, where basically there just isn't enough cash available.
So it sounds like the central banks in both countries have their work cut out for them. Are they doing anything to try and prevent this worst-case scenario?
Oh, yeah, they are. It's a delicate balancing act, though. You see, they're both trying to manage their own economies while also trying to avoid triggering some global financial meltdown.
So how are they going about it?
Well, they're using these tools to influence specifically the 10-year government bond yields in their countries.
Okay, and why are those yields so important in this whole currency drama?
Because these yields basically signal to global investors how attractive a country's assets are. And the more attractive the assets, the stronger the demand for their currency, which can push its value up.
Got it. So how's that playing out in Japan specifically?
They're in this kind of tricky spot. They're raising those short-term rates to fight inflation, but at the same time, they're buying up their own longer-term bonds, which helps keep those yields down and manages how fast the yen strengthens.
So they're trying to walk a fine line there, huh?
Absolutely. And on the U.S. side, things are a bit different.
What's the strategy there, given what you've been reading?
Well, they might actually consider letting those 10-year bond yields drift a bit lower, which would make borrowing cheaper in the U.S. and hopefully take some pressure off the dollar.
Interesting. So they're both kind of subtly nudging things in different directions.
Yeah, you could call it like a mutual signaling between the two central banks.
Right, like they're trying to coordinate to avoid any drastic moves that could throw everything off.
Exactly. They don't want to spook the markets,
Makes sense. But let's say for a second that this careful balancing act fails.
Mm-hmm.
What are the real-world consequences if this whole thing blows up?
Well, the biggest worry is that if the U.S. cuts rates while Japan is still hiking them, you could see a really rapid strengthening of the yen.
And that's bad because?
Well, it could cause a massive exodus from dollar-denominated assets, like a stampede for the exits. And all that selling could shake up global stock markets, dry up available dollars, and really hurt countries that owe a lot of money. in dollars.
So this isn't just some theoretical currency fluctuation. It sounds like this could have a real impact on the entire global financial system.
Oh, absolutely. That's why everyone's watching this so closely. The yen-dollar relationship has become a key factor in global financial stability.
It's amazing, isn't it? These decisions being made in Tokyo and Washington can ripple out and affect everyone around the world.
Yeah, it really highlights how interconnected everything is these days.
So let's sum it up for everyone listening. What's the key takeaway here?
Basically, we're seeing the unwinding of a massive trade that relied on a weak yen for years. And that shift is happening because Japan and the US might be moving in opposite directions with their interest rates.
And that creates a lot of uncertainty and the potential for some pretty dramatic consequences if things get out of hand.
Yeah, you've got central banks trying to juggle their own domestic needs without setting off a global financial earthquake.
It's a tightrope walk for sure.
Yeah.
So for all of you out there, think about this. How can what seems like a technical policy change in one country have such a big impact on the entire world?
It's a good reminder that the global economy is a complex and interconnected system.
And it's definitely something to keep in mind as we see how things unfold in the coming months. Thanks for taking this deep dive with us.
Of course, anytime.
We'll be back soon with another look at the forces shaping the world around us.
Looking forward to it.